Hmm? Group accounts. These are what we need to know as the foundation to group accounts. One, definition of terms. Definition of terms is definition of terms. Two, view structure. Three, cost of investments. Which can be cash payments, it can be share consideration, it can be deferred consideration. It can also be contingents. Then the last one, which is the loan notes. The last one, which is the loan. That is it. We must know all these things very well. Then says the combination. We are going to apply the cost of investments of each one of them or combination of one or two in a question, so that you know how to treat all the costs of investments. Now, 4, we must know how to calculate the goodwill. 5, valuation of SCR. 6, we must know investment in associates. 7, we'll talk about retained earning, net assets of subsidiaries. Then 8, retained earning of sub. Then the adjustments. All those adjustments, we'll be using question to demonstrate how it is being applied. Adjustments to group accounts. Then the last one, before you go, Application of accounting standards. Accounting standards. So group question. So question on group accounts. By then you must have learned many group questions. Then you will now use one or two. You will now be picking the standard and be applying it. These are things ordinarily we must understand very well. Before we do this one too, when we are talking about group accounts, remember we are talking about one thing: shares acquisition. Anytime you hear group accounts, be sure to yourself, shares acquisition or acquire shares investments. Shares investments. So investment in group accounts, line of investment in group accounts cannot be in this following. Line of investment. If I have investment from 1%, that means I bought shares in any company from 1% up to 19% investment. Up to 19. This investment is known as simple investments. They don't call it simple, they call it ordinary investments. They don't call it ordinary investments, they call it trading investments. All these investments are under financial instruments. Financial instruments. Under category financial assets. Because when you are buying shares in any company, you have an asset. Now, how do we account for this investment? We use IFRS 9. We talk about measurement and recognition. Then we talk about IAS 32. How do we classify it? Is it preferred shares or is it share capital? Then IFRS 7. We are going to treat this one separately. In the next 2 weeks, you will see it. Then IFRS 7. All these are used to account for this kind of investment, which is known as ordinary trading or simple investment. Then if I have investments from 20% up to 50%, that means I bought shares in any company that range from 20 to 50%. This kind of investment is known as associates. And I will account for associates using IAS 28 equity method. This is it. Equity method. What are those things I need to know when it comes to associates? There are 5 things. when associate impairment to loan to associates, how is it treated? Dividend paid by associates. Share profits or loss, then unrealized profits on inventory. No question can carry all the five, but those 5 things must be known very well. Don't forget, no question can carry the five, but those 5 things must be known very well. Then, if I have investments from 51%, I have investments from 51% up to 100%. What type of investment is called this one? Subsidiary. Why? Because I have control. Also start from 51%. The day I have control, it is because the date of acquisition. And the day I lose control, date of disposal. Then DOC, date of consolidation. What are the standard year? We have IFRS 3, which talk about business combination. All those acquisition expenses, cost of investment is when I talk about it. We have IFRS 10, consolidated financial statement, which lay emphasis on control. We have IAS 27, separate financial statements. IFRS 11 and 12. 11 talks about joint ventures and joint operation, because it talks about joint arrangements. Joint arrangement can be of 2 types, according to IFRS 11. Joint operation, joint ventures. If it is joint ventures, it's going to be treated like associates. Joint ventures. Then as a joint operation, we will not know. Okay. These are the literal things that we want to do. These are what we want to do to prepare the account. So let's start quickly rush. Let's rush some aspects that we are used to. Definition of terms. Don't forget, I have shared the material for you. The definition of terms. 1. For the definition, group account is account of the parent and its subsidiary, prepared and presented as if they are single entity. They are not single entity. They are two different entities. But because of substance over form, we assume that they are single entity. Why? Because economic reality is different from the legal term. Economic reality is different from the legal term. The legal term is saying two different entities, 1 plus 1. Good. Two different entities. Let me share. Okay. Yeah. It's saying 1 plus 1 is 2. But in group accounts, it's 1. Why? Because the other one has control over the subsidiary, the parents. Just like husband and wife. They are one in the face of the imams and the pastors. They see husband and wife as one. They will even pronounce it that they have joined them together and they become one. They become one. However, legal reality is showing they are not one. They are two different entities. That is why it is substance over form. Because the other one can control the resources. Okay. Now, the following accounting standard, which we have mentioned.
Excuse me, sir, please.
Okay. I'm with you.
Sir, you said you shared the material, please. Where? Do you hear me, sir?
Why is this question always coming up?
Sorry, sir, I didn't see any material in the group. And I didn't see any in my GM too.
Check your last Zoom link. The one for last week.
For last week, okay.
Prosper, I even shared the material with you. Check out.
You did? Okay,
Yeah.
okay, I'll do it. Thank you.
This is how it works. If I will send the material to use to Mr. Wasil, he has everybody's email. Then he will send the material to your email. Then we expect you to have printed it or anyhow you want to use it. Okay. Now, let's go to some definition. Group cannot be one person, a parent and all its subsidiary. Consolidated financial statement is the financial statement of the parent and its subsidiary prepared as if they were a single economic entity. Who is a parent? Parent that controls one or more subsidiary. For example, a man has control over the wife. We assume he's the parent. He has control. This is the same thing. Company A, company B. Company A acquire 80%. He acquire 80%. He acquired 80% in company B, let's say to company. This happens. Two companies. Eco and Biko. Eco has 80% investment, share investment. He has control. Who is the parent? Eco, parents. They can also call him the investor, acquirer, the holding company. The remaining 20% belongs to NCI because there's no 100% acquisition. Don't forget. There will not be NCI if you acquire 100%. So who is the NCI not controlling interest? Good. Now, that is what we are saying. Parents control another subsidiary. Who is a subsidiary? The one they control. Entity that is being controlled by another entity. What is control? Control is what makes him to be substance over form. Why? Because with control, you can manipulate the resource of the other person. An entity that is control is an investor, controls an investee. Who is an investor? Parents. Controls an investee, subsidiary. When the investor is exposed to or has right to variable returns from involvement with investee and has ability to affect those returns through its power over the investee. Then business combination. Acquisition date, he has control. Who is an acquirer? The person that has control, acquiree, the one they control. Exception not to consolidate. And types of subsidiary. Without wasting much of your time, you can do all those ones because we have where we are going. It must pass the established standard, which is like you must see the question, say, oh, this question is too cheap for me. Cost of investment. Measuring the cost of an acquisition, the consideration. IFRS 3 says that the purchase consideration for an acquisition in a business combination is a sum of the fair values of acquisition dates of all the assets transferred by the acquirer, such as cash, liability incurred by the acquirer to the former owners of the acquiree, equity instrument issued by the acquirer in exchange for control at acquiree. In summary, which is what we need. This is the amount of and the fair value of the consideration given up to acquire a subsidiary by the parent company, which includes the following: cash payments, share consideration, deferred consideration, contingent, exchange of subsidiary loan for shares, which is the loan note, then the combination. It can be more than one or two. The question we are going to start with we only deal with cash today. From next week, I will give the definition of the share consideration, bring one or two scenarios, they will not solve a full question from it. Then, what are the major components of group accounts? Goodwill. Who can tell me how do we calculate goodwill? What is the formula to calculate goodwill? You are not an FR student, you are CR. Definitely, for you to get to this level, you must have done FR and pass conveniently, or you are being exempted, knowing fully well you have known all these things. So, who can define or who can tell us the formula for goodwill? Not define. Formula for goodwill. What is the formula for goodwill? Is there anybody who wants to try? Is there anybody who
Hello,
wants
sir.
to try?
Sir,
Hmm?
good evening, sir.
Good evening, ma'am.
Okay, for goodwill, I think we will have to get the purchase consideration, then the NCI, they will now less the net assets acquired. I don't know if I'm correct.
You are
How
not.
to determine our goodwill.
You are not. You are not. It means a line. Any other person? Any other person? That's fine, but you are missing a line. Okay, let's try, my sister. I know you know it. Just don't want to talk. Let me look at it. To calculate goodwill, first of all, don't forget the goodwill you are talking come from business combination. That is purchase goodwill. Goodwill comes from business combination, the purchase goodwill. That is what we are talking about. Now, formula to calculate goodwill now. The cost of investment. Don't forget the cost of investment, which can be cash, shares, dividend, contingent, and loan notes. I will now add NCI, the non-controlling interest, to it. This is what is giving me purchase consideration. I will now less the net assets. I will less the net assets. I will now less the net assets at the date of acquisition. Don't forget, goodwill happens at acquisition. And all this thing that will go there must be at acquisition of goodwill. It's either it's giving me goodwill or gain on purchase bargaining, which is known as negative goodwill. It's a gain on purchase bargain. Good. This is the formula. It means all the costs of investment, like cash, share, must NCI. What is NCI? The non-controlling interest, the share that is not acquired by the parents, which I will come back to now. Then before talking about that, what is net assets? My brothers and sisters, net assets are equities. Net assets at any date, net assets equals to equities. What are the two? Anytime you hear net assets in group account, think of the equities. We have one, share capital. It can be issued above the nominal value and give premium. Share premium. It's a share premium. Sorry. Retain earning. Retain earning. Other component of equity. Retain earning. Then we have 3 retained earnings. Then 4 revaluation surplus. Then 5 other equity components. Addition of all these at any date of acquisition, date of disposal, give me the net asset. Don't forget, in exam, 2 is a must. Retain earning must be the question. Share capital, 1, and retain earning. The remaining 3 are optionals. That's why it is very rare to see questions that will carry all the 3. That is why it is very rare to see questions that will carry all the 3. Any question? Now, at least we have known the cost of investments. We have also known net assets. Don't forget to calculate the goodwill. We need the cost of it. And NCI. Let's go to NCI now. Who is NCI? Who are the NCI? Let's start from there. The NCI. They are known as what? The non-controlling interests. The non-controlling interests. Don't forget, we said ECO, BICO. If ECO acquire 80% in BICO, ECO is a parent that has 80%. Then the remaining NCI, 20% NCI. Addition of the 2, 100%. There is 2 owners to this company. This company is known as a subsidiary with 2 owners, parents, and NCI. We only know the percentage. What about the value? We only know the percentage. What about the value of NCI? That is what we want to do now. We want to do valuation of NCI. How do we value NCI? How is NCI going to be valued? We will look at it. Valuation of NCI. NCI can be valued in two ways. It's either it is fair value or share proportionate. Another name for fair value, another name, they call it full goodwill method or gross goodwill method. Another name for share proportionate, they call it partial goodwill method or net assets method. These are the two names they call them. Now, in exam, how do I know it is fair value? What I'm going to see, the indicators of fair value. What are the indicators of fair value? What am I going to see in the question that will tell me that it is fair value? That's what we want to do now. 1. The question must supply 1. Market price per shares of subsidiary or NCI. Will be given in the question. Market price per share of subsidiary or NCI will be given in the question. Go to your material. Let's demonstrate that. Go to your material now. Look at the question. Go to question 2. Blue and bed. Additional information E and F. Are you there? Additional information E and F. Indicators of fair value. Additional information E and F. Are you there? Have you seen it?
Yes, sir.
Now, if you put additional information E and F, it said it is the group policy to value non-controlling interest at fair value. The market price per shares of non-controlling interest, non-controlling shareholders, just before the acquisition is 1 naira takeover, he has given me the value, which is market price per share equals to 1 naira takeover. I will now ask the question, what is the group structure? If you read from the beginning, the question says, additional information, A, blue purchase, blue, we are in blue question. Group structure now. Blue purchase 70%, parents 70%, NCI 30%. Good. I will now ask the question, how many shares are in the subsidiary? Who is the subsidiary? Bed. There is nothing concern you, my brother and sister, with the parents O. I will go to the subsidiary O, which is bed. We are only talking about shares acquisition. What is the shares in bed? If you go to bed, Beg has 170 shares in value. I will convert it to number of shares. I will say total numbers of shares in subsidiary equals to values of shares all over nominal value, which is 170 divided by the nominal value in units, 1. That is it. Ask me a question. We are not starting. We don't enter as one small. Ask me a question. Ask me a question. The first one is the parent. The second one is the subsidiary. Therefore, it is not clear. I will ask, okay. Naira cancel Naira, 170. This is at 100% unit of shares. Parent has 70% of it. Parents. 0.7 times 170. NCI. 0.3 times 170. 0.7 times 170. 0.7 times 170. And it's 0.3 times 170. Well, I'm listening.
119.
0.7 times 170 is what?
119.
119. So this
Total
one
one is 51.
51. Now, I cannot get value of NCR at the date of acquisition. What's the value of NCR at DOA? He has given you the market price per shares of 1.50. I will just owe 51 times. This is the market price per shares. This is the market price per shares. When I talk about times 51, we will not give you the value of NCR at the date of acquisition that will add to the cost of investment. What is now the value now? What is the value?
6.5.
76.5 will now be added. That's all. Yeah. Secondly, fair value of NCI will be given in the question. They will just give you straight fair value of NCI 76.5. No thinking is required. The question will just give you it is the group policy, and the fair value of NCI is 76.5. So I will just put 76.5. That is the second one. The third one, fair value of all subsidiaries will be given. In the question. That means what if analysis. That means if he wants to buy at 100%, you shouldn't use to mix these two up. This one will mention the name. Let me put it there for you. it will mention the name of the sub. Why this one will say fair value of SCR? Let's take, for example, go to Baron question. Are you there?
Yes, sir.
I've seen it. Yeah, let's go to the, yeah. Go to additional information 2. Go to additional information 2. What does it say? It is the policy of the group to measure non-controlling interest at acquisition using full goodwill method. Don't forget another name for fair value. One good method. For this purpose, the fair value of the valet, it will not mention the name of the subsidiary. That means if you want to acquire at 100%, how much you will have paid? That's why we normally refer to it as what if analysis. That if I want to buy 100% acquisition of subsidiary, fair value of the whole company, they will pay 66,000. That is it. Now, does he buy 100%? I'll go and check. Yeah, let's solve the, let's get the value of SCR. Now, Baron. I'll go to the question in Baron at the beginning to determine the group structure. What does he say? Baron PLC acquired 3 million equity shares of Valet on 1st April, okay? He acquired 3 million. I will ask myself, parent acquired shares. Share acquired 3 million. Let's say 3,000. Remove 30. I will ask myself, out of how many does he acquire the 3 million shares? The same way we used to convert. But go and say, okay, what is the total numbers of shares in subsidiary? Which is the values of shares all over nominal value? What is the values of shares? Go to the question in Baron. Equity shares of subsidiary, Valeta. Equity shares of subsidiary, Valeta. He has 8 million. At a nominal value of 2 naira. Hope my brothers and sisters, do you see the figures I have picked? We are only talking about shares acquisitions. Somebody who acquires shares and have control. Then I would divide. 2 goes in 8,000. He has 4,000 shares. Out of the 4,000, he acquired 3 million. I can decide the group structure. I say 3 million, which is the 3,000, over 4,000, the total shares, times 100, 75%. It means group structure can be derived in 2 ways. One, is how the question give me the percentage, 75%, or it give me the number of shares acquired by the parents to get the percentage. That's all. Now, I cannot get the value of NCI. Value of NCI, the date of acquisition. He said if you want to acquire 100%, it will pay 66,000. Times, it does not acquire, you only acquire 75%. So the remaining 75% belongs to NCI, 0.25. It will give me 16,500. It will give me 16,500. That is what he's saying. Any question for me? The last one, indicators of fair value. Last one. The question will now supply me goodwill attributed to NCR. 4. Goodwill attributed to NCR will be given in the question. Go to May 2017. Is it May or November 2017? That is the last time I can assert goodwill attributed to NCR. Let me show you. Go to Aya. Aya question. Are you there? Aya question. On 1st April 20, go to additional information. 5. Aya Limited has a policy of accounting for any non-controlling interest at fair value. For this purpose, fair value of the goodwill attributed to NCR is 48 million. The question will give you goodwill attributed to NCR. That's what the question will give you. Goodwill that belongs to the NCR. Now, these are the 4 indicators of fair value. For sure, proportion is just only 2. 1. When the question is silent, that means there is no, they will not give you anything of fair value. When the question is silent, they will not give you anything relating to fair value at all. We will not proportion it. Net asset method. After we have gotten the net asset, share it. Then 2, company policy. These are the 2 ways. Company policy, they will give you indicators of fair value in the question. They will now contradict it. That is the policy to use share or proportionate method, not fair value. They will contradict it. That is it.
Sorry, sir. I have a question. Yeah,
What
you
is it?
said when the question is silent that we should do what?
You will use share proportionate method. The second way to value NCR, share proportionate. When it is silent, no indicators of fair value. We have now gotten there now. Small. This night, we must lay the foundation and we must solve question. Now, my brothers and sisters, it's as if it's my sister only self, no brother. Any goodwill derived using fair value method. Any goodwill we have derived using fair value method. The goodwill belongs to both the parents and NCR. Any goodwill you have derived when NCI is valued at fair value, the goodwill belongs to both the parent and NCI. Please take note of it. But any goodwill you have derived when NCI is valued at share proportionate, that is the net asset method, the goodwill belongs to parents only. But if it is fair value, it belongs to both the parents and NCI. Now, but even in fair value, my brothers and sisters, even in fair value, the goodwill of the parents is share or proportionate. That means, in summary, the goodwill of the parents is share or proportionate in any method. Let me come back to what I've said so that I can get the clarity. We said even in fair value, the goodwill of the parents is share or proportionate. Even in fair value, the goodwill of the parents is share or proportionate. In summary, the goodwill of the parents is share or proportionate in the two methods. That's what we are saying. I hope you understand the English. And the English understand you too, because we are going to demonstrate it now for you to see very well everything concerning fair value and share proportionate. Good. Now, let's go to page. Let's go to sample question on goodwill. Parents acquire 600,000 shares. Parents acquire 600,000 shares. Parents acquire. A parent, they say a parent. A parent, according to the question, parents acquire 600,000 shares. In subsidiary 3 years ago, for 1.2, he has given me the cost of investment. Don't forget, we said we want to start with cash. 1.2. Good. The subsidiary issue equity share capital that day was 250,000, denominated at 25 kobo per shares. Oh, I can get the total numbers of shares because he has given me the value of the shares. Total numbers of shares in subsidiary plus the values of shares all over nominal value. 250,000 divided by 0.2. This will give me 1 million. I can now calculate the group structure. Parent acquire 600. Over 1 million. That's 100, which is 60%. So 60%. Parent will be For the group structure, yes. Parents, 60%. NCR, 40%. Good. The question still continue. Okay. Other component of subsidiary net asset at acquisition date, we are share premium 550 with NEC 6. Oh, he has given me the net asset. Don't forget, net asset are just 5. Share capital, share premium, retain any revaluation surplus, other components of equity. That is it. 5. No question can give you all the 5. Like this question, he gave us share capital. I will sum it up. Net assets, the date of acquisition. Share capital, 250,000. Share premium, how much is the share premium? Let's see. 550. Then retain. This is
Please, sir, what illustration are we solving?
example on goodwill on page 4.
Okay, sir.
Have you seen it? Other page 4, page 3. Are you there with us, ma? Abi, it's not part of the questioning.
So company 4 is the higher limited.
No. Let me go and share it.
Check example. Is there?
Okay. Please, what's the question number is it?
Is after items that need to be reassessed.
Yes,
Brought
after
to
that, you will
post,
see the
yeah.
example.
The example is below it.
Example of goodwill.
Did you see any return earning before this subheading return earning?
Okay, yes, absolutely. Thank you.
Now, the subsidiary shares were quoted at a stock exchange at 190 kobo. Oh, he has given me the market price per shares. Market price per share of subsidiary, which is an indication it is fair value. 180 kobo. Good. Partial date to require calculate goodwill on acquisition. If it is the policy, not of, if it is the policy of the parent to mention non-controlling interest at fair value. That's 1. 2, calculate goodwill using share proportionate method. And explain what account for the difference in the use of the 2 methods. We will now do now. Say we should use fair value and share proportionate. The same formula for both of them. Now, to calculate goodwill. Or say goodwill. First one, using fair value. That is for the first one. I will say cost of investment, which is 1.2 million. Add NCI, purchase consideration. I will lend the net assets at the date of acquisition. Then I will derive the goodwill. That is it. Now, that is for the fair value. For the share of proportionate, the question also requested for the share of proportionate goodwill using SP, share proportionate method. Cost of investment, which is 1.2 anyway. Add NCI, purchase consideration of not less the net assets at the date of acquisition. Then the goodwill. The goodwill. Yeah, this is what the question says. Now, using fair value, he has given me the market price per shares of each one of them, 1 naira 80 kobo, and how many shares that belongs to NCI. He acquired 600,000 out of 1 million. That means 400,000 is NCI. Market price per shares, which is 1 naira 80 kobo times 400,000 shares. Straight. 1.8 times 400,000. What does it give us? Please help me with your calculator. 1.8 times 400,000.
So how did you get the 400,000?
He acquired 600,000 out of the 1 million.
Okay.
720,000.
What do you say?
720,000.
So 720,000. How we add 720. This will now give me the purchase consideration, which is 1920. I will now less the net asset at date of acquisition, giving it the question to be 148. So the goodwill will now give us 440. Don't forget, the goodwill derived when NCI is valued at fair value. The goodwill belongs to both the parents, and NCI. That is it. For the share proportionate, the same formula, the different valuation of NCI. Add NCI now. I'll now say zero net asset method, share proportionate, share the net asset based on the group structure of the parent and NCI. 0.4 times 148. 0.4 times 148. 0.4 times 148.
592,000.
592,000. One two plus 592,000.
1792.
1792,000. Then we less the net asset at the date of acquisition, which is 1480. This will now give me the goodwill. What is the goodwill?
We want to.
We want to. That is it. We want to. Don't forget the goodwill derived when SCI is valued as share proportionate. The goodwill belongs to who? Parents only. Or shorter method of share proportionate now. The shorter method of share proportionate cost of investment 1.2. I will now remove parent portion 0.6 times 1,480. I will remove parent portion 0.6 times 1.48. That will give me 888. But I remove 1.2 from this will give me 312. It can only be applied for share proportionate method. It can only be applied to share proportionate method. Good. Now, look up what we are doing. Who can tell me out of this 440, what is the goodwill of the parent? Out of the 440.
%60 of the 440.
That's what students used to do. It.
261.
Immediately we do 60% of 440, come back next diet. It will not be your portion. That is why you did not hear, you don't understand my grammar that time. I say even in fair value, the goodwill of the parent, even in fair value, is share proportionate. Even in fair value, the goodwill of the parent is share proportionate. And I said in summary, the goodwill of the parent is share proportionate in any of the two methods. So get the goodwill of the parent here now. 312. That's what he's saying. So
Sir.
get the goodwill of the parent is 312.
I have a question.
Ask your question, my sister.
So does it now mean in every question we have to use the fair value method and still use the share proportionate, since the goodwill will remain the answer gotten using share proportionate?
No, ma. I say go to Aya. Oh, yeah, let's quickly go to Aya. Additional information 5. You to help us read that route. That is why you must know everything. And everything must know you. Go to Aya question. Additional information 5. Oh, yeah, read, ma. What does this is? You to read.
So you said question was 5.
Additional information 5.
Aya Limited has a policy of accounting for any non-controlling interest at fair value. For this purpose, fair value of the goodwill attributable to the non-controlling interest in Lower Limited is 48 million.
Some question will give you the goodwill of the parent, the goodwill of SCI. They will not say you get the total goodwill. We are still coming to diversity of questions. They will give you that of the SCI. Go to 2017. They will give you, say, this is the goodwill of SCI. You will get the total goodwill. That is why we must know it from the basis. Anytime they treat it at fair value, we must be able to get it. No issue. We are coming there. Now, 440 minus 3112. 440 minus 3112. Okay. 440
28.
128. Now, I can decide to get the goodwill of the NCI. I will now apply the formula. I don't want to get the parent first. I want to get the NCI. I say goodwill attributed to NCI. I know the formula. I will now apply it as NCI at fair value minus NCI percentage on net assets at the date of acquisition. NCI at fair value is 720,000. NCI percentage 0.4 times 148, which is giving me 592. 720 minus 592. What does it give us? What does it now give us? Oh yeah, what will be the answer? 720 minus 592.
128.
I can decide to get that one first. 128. That is it. Now, let's say we are doing higher question, let's say this question. They now give me goodwill attributed to NCI in the question. They give me goodwill attributed to NCI of 128. I cannot get the total goodwill. Let's say I'm doing a question. They now give me goodwill attributed to NCI. How can I get the total goodwill?
Sorry, sir, can you
Let's
come again
assume,
with the question?
what do you say?
Sir, please come again with the question you just asked,
The
please.
question is this, man. Very clear. Is that in a question, just like Yaya, they give me goodwill attributed to NCI. Let's say the question gives us goodwill attributed to NCI. And how can I get the total goodwill? How can I get the total goodwill? Let's say the question gives us goodwill. Goodwill attributed to NCI, which is 128. How can I get the total goodwill? My sister is very clear. I will now go and use share proportionate parent goodwill. Option 1, I will use share proportionate method. I will get the parent goodwill to be what? 312. Everything will now give me 440. That is it. I will just go and get the goodwill parents. That is option 1. First option. Option 2. Option 2. Option. I will now get what is called NCI at fair value. NCI at fair value, anytime you hear NCI is at fair value, look at what it means. Goodwill attributed to NCI plus addition, summation of NCI percentage on net assets at the date of acquisition. What is the goodwill attributed to NCI? 128,000 plus NCI percentage 0.4 times 148, 592. Addition of the two will now give me 720. Is the 720, I will now add it to the cost of investment, just like what we have done. I will now say, okay, I've gotten NCI at fair value. I will now add it to 720 to the cost of investment. It will say, give me 440. Option 2. Any issues?
Yes, sir. Sir, please, can you explain this option 2 again?
Option 2, I will go and get what they call NCI at fair value. What is NCI at fair value? Is the combination, summation, addition of goodwill attributed to NCI plus NCI percentage on the net asset at acquisition. What is trying to tell you is that when it is fair value, NCI is entitled to goodwill, it's also entitled to what? Net
So can we
asset.
see the solving? We're not seeing the solvings.
Okay, you want to see the solution?
Yes,
No
sir.
problem. This is it. It's addition of the goodwill attributed to NCI plus the NCI percentage of the net asset at the date of acquisition. Addition of the two will give me. Look again. If I want to buy this company at 100%, if I want to buy it at 100%, 100% acquisition. That means I want to buy the shares in the company. Okay. The company has 1 million shares at a market price of what? 1.80 kobo. So I'm going to pay 1.8 million for the acquisition. Because the market price per share is 1.80 kobo. That is the amount you pay. That is the amount you pay. Now, in summary, what we have been doing this morning for clarity purpose, look at it. Valuation of NCI. 1. Market price per shares of subsidiary will be given. I will now get fair value of NCR. How? By saying, what is the market price per share? 1 naira each cover times 400,000. That will give me 720. So, fair value of NCR will be given in the question. $720. 3. Fair value of the whole subsidiary. Fair value of the whole. So, will be given in the question. For this question, 1.8 million. If you want to buy everything, you only buy 60%. NCR will be 40% times 0.4, 720. 4. The question can decide to give me goodwill attributed to NCR of 128,000. I will now add NCR percentage on net assets at the date of acquisition, which is 592. On asset 128,000 plus 592. It will still give me NCR fair value 720. That is why it can only be one out of before it can never be two, because each one of them will give you the same answer. Go and tell wrong. Each one of them they want to bring must give you the same answer, 720. If they like, they give you market price per shares. The fair value of NCR must be the same. With when they give me the fair value of the question of the NCR directly, when they give me fair value of the whole subsidiary, I will still get the same thing. When they give me goodwill attributed to NCR, I will still get the same thing. So that is why two cannot be in a question. It is just only one. They cannot test you. They cannot give fair value of NCR. Still give you market price per shares. That is Yaba left question. Because any one of them must give result in the same one answer when it is fair value. Any question? Any question?
Yes, sir.
No, sir. Yes, sir.
Yes, sir.
Yeah, what is the question?
So when you did the solution, right, and we got 440 as
Yes.
yes, you were about telling us on how to get the parent share from the 440, because I think the person that answered used 60% to multiply the 440 and you said it's wrong.
I have done it. Let me show you. I said, what is the goodwill of the parents? The goodwill of the parents is share proportionate, even in fair value. I have done it. Let me show you. Look at it here. Okay, let me go. It's 3112. Goodwill of the parents is share proportionate. Pick any question, which is fair value. Go and use the goodwill of the parents. We'll get the parent, the share proportionate is in fair value. The goodwill of the parent is share proportionate. in fair value is not by percentage. I'll go and get the parent share proportionate. If I don't want to do that, I can get the NCI first. What is the formula for the NCI? I'm giving you here. This is the formula. I can get the NCI first. 720 at fair value. Any question? Yeah.
So please, I have just a clarification. I wanted to confirm something. When you get your consideration and then you add your non-controlling interest, the figure you get, what is this supposed to represent?
That your intonation is like those. I think your intonation is like British or American English.
Sorry, Dan.
Can you help me clarify the word? So,
Okay, so the question I'm asking is, when, for instance, the example now where we calculated goodwill using share proportionate, for instance, the consideration 1.2, then we add the non-controlling interest. The figure we
yes.
get, which is the 1,792,000. What does it represent? Is there like a name for it? What does it represent? What I'm trying to understand.
Now, that's why I said the definition is wrong. Cost of investment, 1.2. When I add NCI, it is now known as purchase consideration. When I add NCI, PC, cost of investment plus NCI is known as purchase consideration. But sometimes they also refer to cost of investment as purchase consideration. But normally, is the addition of the cost of investment plus NCI will give me the purchase consideration. Yes, any issue? Now, I want to ask you a question. Based on what we have done so far, what is the difference between goodwill when it's valued at fair value and goodwill using share proportionate method? Can you tell me the difference between the two?
Yes, sir.
What is the difference now?
You said that the goodwill gotten using fair value methods is for both the NCI and for the parents, while the goodwill gotten using the share proportionate is for the parents alone.
Let me get to you again. I'm trying to nationalize what you have said.
You said the goodwill gotten using the share proportionate method represent the goodwill for the parent company, while the goodwill gotten using the fair value method is for both the parents and the subsidiary.
Yes,
That
you are
is
right, but that's not the difference. You are right.
okay.
That is the interpretation. Then what is the
Oh.
difference? You are right. You have done the interpretation. There's this, one thing is missing that we used to say in the group account always. You look at the NCR. When NCR is valued at fair value, 720. When it is sure proportionate, 590. What do you think is responsible for the difference? Let me show you here. Fair value. Sure proportionate. NCR. Is he entitled to net assets? No, let's do this way. Okay, net asset, two things. Goodwill. Fair value. NCR at fair value. NCR at sure proportionate. When it is net assets, those NCR entitled to net asset under fair value, yes. Under sure proportionate, yes. Under goodwill, does NCR entitled to the fair value? Yes. Does he entitled to? No. The difference between fair value and share proportionate is the goodwill attributed to NCR. Anytime they ask what is the difference between fair value and share proportionate, tell them there's no goodwill attributed to NCR in share proportionate method. That's why it's the only goodwill of the parents. Then fair value, goodwill, NCR is entitled to goodwill. That is the only difference between the two of them. That is the difference between two of them. So yeah. Any other question before we proceed? Do I need to send you this solution? Or you are good?
Yes, sir. We need it, please. Even the one we did for first class. I think.
I'm sending a voice note regarding all this. So that you can also
Okay.
listen to the voice note. Instead of you listening to Twe or Spyro, who is my guy, you will not be listening to the content of the voice notes. The voice is not palatable to the ear. I know too. But the message is the important issue here. Okay?
So I also called you today about the last class recording.
What do you say?
Our last lecture.
They've not
It
sent
was
it
not
again.
posted. Yes.
Shout me Sawasi.
All right, sir.
Shout me Sawasi. Now, let's go to question. When they give me the question in exam concerning group accounts, what is my own duty? I will open everything. What are the accounts to open? Group structure. Adjusted return of subsidiary. Determination of net assets. Goodwill. Retain of the parent and SCR. That is all. That is it.
Sorry, sir, I didn't hear you, sir.
We are going to, let's go to question 1. Normal question. Simple group question. I will now be showing you all the adjustments. Pay attention to it. All the adjustments. Supercore, ESC. Supercore. I'll say consolidated. Statements of financial position as at 31st December 20 years. This is it. Of course, okay, no current assets. PPE. PPE. We have PPE 4906 plus 2860. Investments. In write the goodwill. After the goodwill, I need to space. Go to current assets. Now the current assets, we have inventories. Okay, 1406 plus 360. Trade receivable 2267 plus 1079. Cash 221 plus 7. Total assets. Equities and liabilities. Share capital. Yes. Retail N. Leave a last page, define CI. Non-current liabilities. Loan. One 923 plus 615. Current liabilities. Trade payables. One 249 plus 1157. tax liability. Four, 3 plus 13. To balance these accounts, what do I need? To balance the accounts, I need the group structure. How did they stand? I need to adjust it. Retained earnings of subsidiaries. As per SOFP. 2. Determination. I need determination of net assets of subsidiaries. Items. DOA, DOC, and post. Then goodwill. The goodwill. Okay. The goodwill. Open the goodwill account. Cost of investments. Add NCI. Purchase consideration. Net assets. Rate of acquisition. Goodwill. I will leave 2 line space. Impairments. In case there's any. Next. I need NCI. NCI. Date of acquisition. The return of the parents. That is what I open exam. I need return to any of parents. As per SOFP. Then my workings. My workings. I will now be reading and be posting. As I read, I post. I become post now do. This is it. Ask me question. I will open everything. I will now start be posting it. Any issue? We will now start reading. I'll be posting it. Okay. Let's read. The following interest statement of financial position of Supercorp Limited and Supercorp as at 31st December 2002. Good. All figures assumed to be correct. Supercorp Limited acquired 70%. Supercorp Limited acquired 70% of Supercorp on 1st January 2002. Oh, I'll go and fill in the gap. Good structure. Parents. 70% NCR. Oh, yeah. Now, let's assume we're in exam and you are the examiner. And this is what I have done, 20 marks. And I submit this one for you now. How many marks will you give me? I have opened everything. Let's assume you have to mark my work. How many marks are you going to give me?
18.
Eh?
18.
18, okay. If that's what they do, everybody will not qualify them. At least, I'm guaranteed of getting nothing less than 2 or 3. That's why we will just know the accounts to open. What are the accounts? Blue section. I just tell retain any of subsidiary. As per SOFP, I can fill in the gap. I will go to the question. What is the retain earning reported? Is there already? I just go, okay. As per SOFP, what is the return of the parent and subsidiary? 1520. Then that of the parent, 2524. 2524. That's all. That's all. He has given me the day he acquired, said on 1st January 2000, when Supercorp Limited had a retain earning of 900. Don't forget, net asset adjustment, share capital, share premium, retain earning, other component of equity, and evaluation surplus that can happen at the date of acquisition or is in the book already. Get the logic and let the logic get you. What is it trying to say? The day you acquire, how much is in your account? 900. You are talking about net assets now. So just go to the net assets. Net asset on which day? The date of acquisition. I'll go and pick what is the shares in subsidiaries. $1,000. He said that day, retain earning is 900. So far, so good. As I'm reading and posting, I become post now do. He has told me the day he acquire. I'll go to my working. Okay. Date of acquisition. 1st January 2000. Which date are we consolidating? Ending of the question. All the requirements. 31st December 2002. How many years? This is 3 years. Additional information 2. The non-controlling interest is mentioned as proportionate of the net asset. Oh, sure, proportionate, not fair value. Once I get the net asset, I will not share it between the parent and SCR. We'll go to the question. Those stories. I'll go and note it down under my goodwill so that I will not make mistake. SP, share proportionate. Then, third question. Due diligence exercises carried out on acquisition of Supercore Limited review that Supercore Limited had a fair value of 800,000 compared to the book value of system by 31st December 2000. The land has fair value adjustment. First adjustment in this class. So I open a separate page. Fair value adjustment. We will see out. Fair value adjustment. First, don't forget group account, parent plus subsidiary, plus or minus adjustment. I will not be telling you what to note in the adjustment now. First adjustment now. Adjustment 1. Fair value. Adjustments. However, still says it must be at market price, at fair value, the net assets. Now, fair value can happen in 2 ways. It's either the revalue up, which is known as revaluation, surplus, or we revalue down, which is known as revaluation deficits. Those two. How do I know it's a surplus? How do I know it's a deficit? 1, it will tell you in the English form, above, higher, more than, in excess. In English form, the fair value is more than the carrying amount. Or it will give you the carrying amount. Let's say 100. Fair value 120. This is surplus because today value is more than the carrying amount. Today value is more than the carrying amount. What do I do, my sisters? Where is it? If it is surplus, accounting entry, look at it. PPE, debit plus the reserve, credit. If it is deficit, the same way, it will lower below the carrying amount. Or they will give you the carrying amount at the fair value. Opposite of it, PPE, credit minus reserves, debit minus. Let's post this one. Let's read again so that you can know. Okay? Said, due diligence is carried out on date of auction. Land had a fair value of 800 compared to the book value. The land, fair value, 800. Carrying amount in the book, 610. It has created a surplus. It has created a surplus. Surplus. 190. Debit the PPE. I'll go to my PPE. As I read, I post. No time, I'm finished. debit the PPE. Where's my PPE? Plus 190. Go to the reserves. Date of acquisition. Or come here. Evaluation surplus. Revaluation surplus on land. 190. That's all. But he increased further. If Adibi is not increased, it will be 190 at DOC. That's it. By 31st December, by the end, 31st December 2002, date of consolidation, the land had a fair value of 820, 800 before, 820, 20 difference. Again, I'll ask you 20 plus 190, 210. You will now come here, okay? No issue. 190 is a date of acquisition. For that 20, 190 plus 20, 210. It will give me post-acquisition profit of 210 minus 190, 20. Get the logic. Get the logic. I'll go to my PPE, date of consolidation now. It has increased further, plus 20. Debits. Ask me a question, please. You must pass. Ask me a question.
Sir, please, how did we get 210?
You have what?
How did we get 210?
How do I get to 10?
Yes, sir.
What is the fair value as at the date of acquisition? 800. It has improved as at reporting date, 30 September 2002. It has become 820. It has become 820. 20 has entered it. 820. Immediately you understand this group is very, very easy. If the adjustment, you will just be taking note of the adjustment. Any question? Any other question? No question. I'll go to the next one. At December, there was cash in transit of 140. Oh, cash in transit. You have not told me the trade is even, but there's something in transit. Let me show you how it can be. It can happen in exam. It's only one out of the three. Let me show you. Trade adjustment number 2. Trade receivable. Trade payable. Reconciliation between parents and subsidiaries. Adjustment number 2. Between the parent and subsidiary. First one, agreed to owing. Nothing in transit. Agreed to owing, nothing is in transit. Trade receivable. Credit minus. You cannot owe each other because you're a single entity. we will eliminate trade payable, debits. That's all. This is the first one. It can happen in exam. They will not tell you anything is in transit. Nothing is in transit. Second week. Total cash / inventory in transit. Two things that can be in transit. Total cash or inventory. Next, I'll say trade receivable, credit minus. The cash that is in transit, debit plus. That is it. For the second one. The third one, parts in transit. Part in transit. Trade receivable, credit minus. The part that is in transit, part of the cash in transit, cash, debit. Trade payable, debit. These are the three ways you can come in exam. Trade payable, trade receivable, reconciliation. These are the three ways. Trade payable, trade receivable, reconciliation. Which one does the question give us? Let's see. Said on 31st of December, there was a cash in transit of 140 from Supercool to Supercall Limited. Included in the Supercall Limited is receivable of 1,000 owed from Supercool Limited. Included in Supercool Limited is payable of what? 860 because of the cash in transit. Which one out of the three? Parts in transit. I'll be also okay. The parts in transit. Parts in transit. He said you are owing me 1,000. He has transferred 140 out of the 1,000. We cannot owe each other. I will eliminate 1,000. Cash that is in transit, 140. Trade payable, 860. That's all. It's out of these three. I'll just go to the financial statement. My consolidated. I'll go there. Trade receivable. I'll credit. Don't forget, trade receivable is an asset. If I'm crediting it, minus. Cash is an asset. If I'm debiting it, I'm increasing. I'll go to the trade payable. Trade payable. I will debit. This is a liability account. You must have a credit balance. If I'm debiting it, I'm reducing it. That's all. Ask me question. 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 You mean to additional information? Yeah. Next one. Junior Swakol Limited sold inventory to unrealized profit on inventory. What is the adjustment? Let me see. Do we have space? Should I open another? Let me open. Okay. Good. Was okay. Unrealized profit on inventory. Unrealized profits on inventory. The two things must be established in the question. There must be unsold at DOC. There must be elements of profits. I don't know there's element of profit. Three things. One, margin, markup. Third one, the one that has formula. Formula. That is it. There must be unsold. There must be element of profits. Let's read the question. The question says, Junior sold inventory to Swakol Limited for 830 selling price. Selling price. Sold it at how much? 3.8. What is the cost? The formula one. This good has cost Super Cup 23. Cost 23. 2800. 1. This is the profit we made. You cannot say to each other and make profit. Is there any unsold? Or that's the question. Is there any unsold? One quarter of the goods still remain in inventory. 1/4, 1/4 times 3/8. 1/4 times 3/8. What does it give us? 1/4 times 3/8. I think I just sleep. 1/4 times 3/8. I don't sleep. I beg you.
950.
950. I will apply the formula. Unrealized profit in inventory, URP, equals to profits over total sales times unsold. What is the profits? 15 divided by 3/8 times 950. That is it.
Three 75.
3
75.
like this.
Yes, sir.
Accounting entry. Seller account, that is the retail end of seller, debit, consolidated inventory, inventory. That is it. That is it.
Sir, please, why are we crediting consolidated inventory with the unrealized profits?
If I'm crediting inventory, I'm removing the one you have sold to the parent that does not sell, the profit element of the inventory. I will remove it. You cannot sell to each other in a single entity, let alone making profit on the sales. The one you have not sold, I will remove. Is the element of profit I'm removing. If we sell everything, we will make a profit of 950. If 1/4 of the inventory is unsold, what is the 1/4 of 950? Okay, the profit is 1/5. What is the 1/4 of 1/5? 1/4 times 1/5. What does it give us? Hello?
Sir, the same thing, 375.
Yes, that's what it's saying. The 1/4 is unsold. I will just say seller. Go to the question, who is the seller? Why do you sell and make profits? I will not debit. The seller account credit consolidated. Go to the question, who is seller? Let me go back to this next share. Who is the seller? Go to the account. We are read it. Who is the seller? The seller make profits.
Supercup.
Who is Supercup parent, Abi? I'll come here. Unrealized profit on inventory. I'll go to the account of the parent. Why do you sell and make profit from your subsidiary? I'll go to his account. Unrealized profits on inventory. I will debit his account. Don't forget, if I'm debiting retaining, I'm subtracting from it. Let's stop here, please. We remain one adjustment. Okay, let's quickly talk about the adjustment. Now, impairment, review, look at the goodwill has been impaired by 50. Oh, it's sure proportionate. The goodwill belongs to parents only. You will suffer the impairment only because you are the owner, the goodwill. I will come here, I'll say impairment. I will debit his account, 50. Credit the goodwill. Go to the goodwill, impairments. Come here, say impairments. Fifty. Cost of investment. It has been recorded. Go to the non-current assets. You will see investment in Supercorp recorded. We are going to deal with that next week. Point. How do you see a share proportionate? What is my net asset? Have we had net assets? 2090. RDCI base share proportionate 0.3 times 2090. 0.3 times 2090 share proportionate method. 0.3 times 2090.
Six two seven.
Eh?
627.
627 plus 18 to get the purchase consideration of net less assets. 18, this will give me 7. 2, 14
2427.
minus 2090.
337.
337. Then I will less the 50. This will give me goodwill at DOC.
287.
Just come to goodwill. Seven. That is it. Nothing happened to the returning. One 520. $1,000. 1520. 1520 minus 900. 1520 minus 900. You get the post-acquisition.
620.
Huh?
620.
Of now share profits. Hence, at the date of acquisition, you have gotten that. Let's go and bring the figure. 627. 627. Share acquisition profits. Share profits. 0.3 times 640. That is all. You can go to your solution to get the remaining. Let's go and sleep. You have done well. So next week, you have to solve 3 questions. You have to solve Baron, Aya, and Blue. Super cool. Do you still need the solution?
Yes, sir.
I've sent it to you already.
Okay, thank you,
The
sir.
material. Good. So good night, everybody. Have a wonderful night rest.
Thank you, sir.
Thank you, sir.
Okay, you decided not to talk at all today.
Good night.